Hi, I'm John Stevenson, the Guaranteed Retirement Guy. And let's talk about how much do you actually need to retire in 2024. And of course, the principles we're going to talk about today is, it can apply to any year, but let's talk about right now exactly what you need and what the consensus is. But a lot of people can live on a lot less. Some people need more. So we'll talk about all of that. Okay, so what I'm going to do is I'm going to cite an article that I am reading on stash.com. And I wanted to show you a couple things that I thought was interesting. So some of the things that they came up with is that the average individual needs about 1.2 to 1.5 million to maintain their lifestyle, which I would agree for a lot of people that is true, but it just depends, of course, on how much debt you have, if your house is paid off, where you live, if there's state tax, just your standard of living. So that can vary quite a bit. But most retirees don't have that amount. Most of them are in the 2 to 250 as far as assets. And so that can be terrifying for a lot of people who are thinking about retiring. They're like, all right, well, how do I get some more income for myself? I need more income. Maybe you have just Social Security coming in. Okay, maybe you have a small pension. Maybe you have a combination of both. Maybe your spouse has a pension. And you have to think about if that spouse, of course, if that pension is going to come to you if your spouse were to pass away, or if you get half of it or none of it. So, and the same, goes with Social Security. Of course, if one spouse dies, we know that the surviving spouse will get the higher of the two benefits. Okay, and annuities really do fill a lot of holes when people are looking to fill in the gaps for their income needs. They might need $50,000 a year, and maybe their Social Security only gives them $20,000. And so they'll use an annuity to provide or make up the difference. Okay, and I'll go over those numbers here shortly. I'll show you exactly what you could do. And I think you'll be surprised. You probably won't need as much as you think you need. Okay, so I'm just looking at retirement savings over time. You can see over time, people are obviously building up their savings until around age 65 when they start depleting their savings for retirement. And of course, no one wants to run out. And a lot of times people's savings are depleted, at least according to this graph, at age 80. So that cannot be a good thing if you're going to live longer than that. And people are living longer. So I thought something else was interesting, and they talk about different amounts that you need depending on the type of income. So they say, how much do you need to retire by income? Well, if you need $50,000 a year and you want to retire at age 50, which most people don't retire that early, but some people do, you're going to need 1.4 million. Okay. If you're age 60, which a lot of my clients are at least 60 when they retire, you only need $1 million. Well, that's not too bad. But what if you're waiting till Medicare, 65? Well, at that point, you only need $800,000. So that's looking pretty good for those of you that may feel like you don't have enough assets and you're looking for ways to maximize your income. And you might be waiting for age 67 or even longer for taking Social Security so you can maximize it. And then, of course, it goes up. I mean, if you want $200,000 a year at age 65, you're going to need $3.2 million. At least that's what they're saying. So I think we can do better than that. And I'm going to show you how we can do that with annuities. So here's the thing. When you retire, usually when you retire, you want to at least have the same standard of living that you have right now, or at least as close to it as you can. And a lot of times I will talk with people that feel that, their expenses are going to go down because maybe their house is paid off. But what they find is once they reach retirement, they have more time. So they want to do other things, like maybe more hobbies that cost money. Maybe you want to go skiing. Maybe you skied, for a while when you were younger and you stopped while you're raising the kids and you want to start doing it again. Maybe you want to travel the world and do it. I love skiing. I love snowboarding. And so it can be a very expensive sport. And then what if you just like to travel? You want to go to Italy. Maybe you want to travel to South America. I mean, I love going to Peru. I love hiking the Inca Trail. I've done that a couple times, and I'm going to take my family there hopefully next year. So we love doing that, but that can be costly. I mean, just the plane rides alone. And so just things to think about when you're preparing for retirement and you're thinking you don't need as much money as you're making right now, think again, you might. Okay, so let's go through some scenarios, and I'm going to use annuities. Of course, I'm the guaranteed retirement guy, and I focus on fixed annuities. I focus on fixed index annuities because really what you're doing is you're purchasing a pension. Okay, and I try to use the least amount of assets that I possibly can to provide that income to you, because I'd rather you keep your money in savings or in the stock market or wherever, because I want that to grow for you, and I want you to be able to use that and have that liquidity for other things in the future. So annuities are to be used for a purpose, and people, even the very, very wealthy, will use them to provide that peace of mind, and then they'll use the rest of their assets for more risky things. And of course, if the market takes a dive, they're still, at peace, because they can still travel. They can still keep up their lifestyle because they've planned for it. Okay, so let's talk about annuities. Okay, let's talk about maybe the different scenarios you could use. Now, depending on what your Social Security or what your pension income is, you know that there is a gap, or maybe there's not. But let's say your pension and your Social Security income is $50,000. But let's say you want $100,000 to comfortably retire, $100,000 a year. Okay, so maybe your salary is $100,000 right now, and you know if you retire right now, you're only going to get half of that. And so you're thinking, okay, well, I've got this 401k, or I've got this IRA, I've got this savings. Maybe I want to sell this rental, and I want to just provide myself some passive income. I just don't have to worry about it, no management, no nothing. Annuities can be very effective. So I'm going to share my screen, and I wanted you to see, I'm basing this off of a client who lives in Colorado. Basically, the options are the same across the U.S., just depends. But let's say they're 60 years old. $100,000, if they put $100,000 in and they want to retire right now, it's not going to give them a lot. I mean, you can see the top annuity payouts. The annual payouts are $7,200 a year. Now, remember, this client wants to get another $50,000 a year. They need to bridge that gap. They need $100,000. They've only got $50,000 coming in from their pension and their Social Security. So obviously $100,000 is not going to do it. Now, let's say this client doesn't need to retire at 60. What if they want to wait till 65, because that's when Medicare kicks in? Well, that's very popular because people would rather not have to foot the bill for their health care expenses during that time. Okay, so let's say you wait till 65. Well, 65, if we go down to the highest payout right now, that doesn't, these top ones here, you'll notice that they start a little bit higher, but then they reduce. So let's get that out of there. I'm going to go over here. No income reduction. We want to make sure that it does not go down. You can see the highest annuities right now. Equitrust, you got Aspida, F&G, Gillico, and just lots of different companies. And that's just the first page. But if we look at the top payout, which is based off of that's $12,272. Say, all right, well, we're getting there. Okay, so if $12,272 will that's only from $100,000. It makes sense that we could probably put $400,000 and reach our goal. Okay, so I'm going to put $400,000 in there. And that's going to change, of course, to $49,000. We're pretty much there. Okay, so at that point, at age 65, you've been able to use $400,000 now to provide you a guaranteed income for life at age 65. And you got $100,000 coming in without fail. And that's pretty good. So let's look at a few other scenarios. So that's $49,000. And keep in mind, this works because you fund it now. Okay, these annuities have an income rider, and it has a roll-up rate that gives you guaranteed growth for those 5 years. And when that growth materializes after 5 years and is multiplied by the withdrawal rate, it gives you a high amount of income. Okay, so it is important. If you're thinking about retiring, you need to do this sooner rather than later, because I can put that same $400,000 in at age 65, and I will not get $49,000 a year if I turn it on immediately, because I did not have the benefit of those 5 years of growth. Okay, so if you do have some time, do that. Otherwise, you're going to have to put in more principal. Now, what if you're married? Okay, a lot of my clients are married, and they want to make sure that the income continues to their spouse. Okay, well, let's put joint on here. And let's say the spouse is the same age. We're just going to make this nice and simple. You notice the income goes down because now the insurance company is on the hook for 2 people. And because of that, the risk is higher and they don't guarantee as much income, especially when the spouse is a female. Females live longer. On average, they live up to 5 years longer than us males. So that's something to think about. So I'm going to need to put more money in there. So let's say I need to put 500 grand in, okay? Because it's a joint payout. I want to make sure that my spouse has the same income, and if I pass away, it continues. And you'll notice that works out great. Now it's $52,596 at age 65. Now that works, okay? So now I've got my Social Security, I've got my pension, and I've got my annuity that's paying me $52,000. So I'm at $102,000 a year. That's great. Okay, so we've got that figured out. Now, if you have more assets, now remember, we were talking about you need 1.2 million, right? On average to retire, or 1.4 million. You notice that we just did this off of $500,000. We didn't need the full amount. Okay, that's pretty good. That's really good. You'll notice for $200,000 a year, they were telling us what, 3.5 million, I think is what it was. Well, if you go in here and say, okay, well, do I really need that? What if I want 200 grand a year? And I've got 50 grand coming in from Social Security and from pension, and I want $200,000 a year. Well, let's just change that to 1.5 million. Okay, 1.5 million. It's $157,000 a year. That's joint income, by the way. So now I've got my Social Security, and I've got this annuity paying $157,000. I'm at $207,000 at 65 years old. And guess what? That only took $1.5 million. That's $2 million less than what was originally projected, that you need at least $3.5 million to have $200,000 in income. That is certainly not true. Okay. 1.5 million got you there. Now, what if you're thinking about inflation? You're thinking, all right, well, that's all fine and good, John. We've got 100,000 coming in a year. Great. What about in 20 years when that 100,000 is worth 60,000? What then, John? Okay. How are you going to fix that? Well, I know that that's going to deplete, right? That the buying power is going to deplete, and I want to give myself a raise. So since I put $500,000 into an annuity and I allowed it to grow at that 6.5 guaranteed growth rate, then it's going to give me $103,000 roughly in guaranteed income, joint income for the rest of my life and my spouse's life. So now I'm at $300,000 at age 75. Okay, and we can work these numbers out. If you want to book a call, we can do this together, and we'll look at exactly the income need that you need right now in 2024, or whatever year it is, whatever year you watch this, we'll look at what your income need is at that point, and then we will look at inflation, and we'll look at exactly where your purchasing power is going to be in 10, 20, 30, 40 years from now, and then we'll look at annuity options to make sure that you can keep up with that. The nice thing about annuities is they're guaranteed. There are other ways, of course, as you know, to be able to give yourself enough income in 2024. You know that you can use dividends. Okay, we've got dividends, we've got munis, you got rental properties. But a lot of those you have to manage or change up, and a lot of them are not guaranteed. And so a lot of people who reach out to me, they just want some guarantees as part of their portfolio. Okay, and this is the way to do it. You can put the rest of your money into whatever you want and continue to earn from that. And if you want to take extra income, you certainly can. The reason why people use annuities is because they want that contract of income, they want that guarantee, and it gives them the peace of mind, which to them and to most of us, there is no price on that peace of mind. So, all right, I hope this video was helpful. I really appreciate you watching. And again, if you want to book a call with me, if you want to chat about your personal situation, go ahead and click the link below this video. Okay, there's a link to my calendar, and we'll go over exactly what you're looking for. We'll go over your income plan. We'll look at exactly how much you need to retire according to what your goals are. And then we'll use annuities, or I will recommend the top or the highest paying annuities to give you those. Okay, it's not going to matter to me which ones they are. Sometimes agents will show you one or two annuities, which are good, but I'd rather show you everything, because sometimes the highest payouts do pay less commissions. Keep that in mind. There are a lot of agents that will sell you something that has a good payout, but not the best payout, because it pays them a higher commission. Okay, don't be fooled. Don't be sold. You want to make sure that you are looking out for your best interest. Okay, so I don't mind showing you everything that's available, and then I can answer your questions at that point. So, okay, thanks for watching, and we'll see you next time.